In the quiet halls of Berkshire Hathaway, Warren Buffett has been orchestrating what might be his most strategic move yet. While the headlines scream about Trump's upcoming presidency and his 100 planned executive orders, the Oracle of Omaha has been silently building a $125 billion war chest. But here's the fascinating part. Buffett isn't just stockpiling cash. He's transformed what was once a modest $50 million annual yield into an astounding $5 billion by leveraging short-term bonds at their peak rates. Think about that for a moment. That's not just smart money management. That's seeing something on the horizon that most investors are missing. And Buffett isn't alone. The wealthiest investors in America are quietly repositioning their portfolios, preparing for what 2025 might bring. With the Federal Reserve signaling multiple rate cuts, the landscape of investment is about to dramatically shift. We're witnessing a perfect storm brewing. Trump's imminent policy changes, the AI revolution reshaping entire industries, and cryptocurrency markets reaching milestones that seemed impossible just months ago when Bitcoin crossed that historic $100,000 mark. But here's what keeps me up at night, and what you absolutely need to understand. This isn't just another market cycle. We're standing at the crossroads of potentially the biggest wealth transfer opportunity of the decade. While most investors are focused on the obvious headlines, the real story is hidden in the historical data across 4 presidencies. I've spent countless hours analyzing sector performances under Bush, Obama, Trump, and Biden, and what I've uncovered is nothing short of remarkable. The patterns are clear, but they're not what you might expect. Some sectors that soared under previous administrations are poised for a dramatic reversal. Others, barely noticed by mainstream analysts, are showing all the signs of explosive growth potential. And in the next few minutes, I'm going to share exactly what the ultra-wealthy already know about these shifts. And more importantly, how you can position yourself to potentially benefit from them. The clock is ticking, and these opportunities won't wait. Let me show you what's really happening behind the scenes. Before I reveal what billionaires are quietly doing with their money in 2025, smash that like button and hit subscribe. Because this isn't just another market prediction, this is insider information you need to know before Trump's first 100 days. What's fascinating about Warren Buffett's recent moves isn't just the size of his cash position, it's the strategic brilliance behind it. When most investors were frantically chasing the latest tech stocks, or trying to predict Trump's impact on the markets, Buffett was executing a masterclass in patience and timing. Let me take you behind the scenes of what might be one of his most calculated moves yet. Picture this. While the markets were swinging wildly between Q3 of 2023 and Q3 of 2024, Berkshire Hathaway's stock position was quietly decreasing. But here's where it gets interesting. Their treasury holdings were simultaneously skyrocketing. Buffett wasn't running scared, he was running smart. He saw something that most investors missed entirely, an opportunity in what others considered the most boring corner of the market, short-term bonds. Remember when Buffett said, "We find it quite attractive under current conditions"? He wasn't just making a casual observation. He was sitting on $125 billion in short-term investments that were about to tell an incredible story. Not long ago, these investments were earning a mere 4 basis points, practically pocket change, generating only $50 million annually. But then something remarkable happened. Just days ago, Berkshire bought $3 billion in bills at a staggering 5.92% bond equivalent yield. Do the math, and you'll see why this move was pure Buffett brilliance. That same position is now set to generate around $5 billion annually. But here's the part that most people are missing. This isn't Buffett playing defense. It's him loading the sling of a financial catapult. As the Fed signals potential rate cuts in 2025, these high-yielding positions will eventually need a new home. Buffett isn't just waiting, he's watching. Like a chess master thinking 5 moves ahead, he's positioned himself perfectly for what's coming next. The real question isn't whether Buffett will deploy this massive cash position, it's when and where. And based on historical patterns and the emerging political landscape under Trump's incoming administration, I've identified several sectors that align perfectly with Buffett's traditional value hunting strategy. Let me take you on a fascinating journey through 4 presidencies that reveal something remarkable about where money flows when power shifts in Washington. What I'm about to share isn't just numbers on a chart. It's a pattern that could potentially unlock the blueprint for what's coming next in the markets. Think about this. During Trump's last presidency, something extraordinary happened in 3 key sectors that nobody saw coming. Healthcare, consumer discretionary, and information technology didn't just grow, they skyrocketed. But here's where it gets really interesting, and why you can't simply rely on history to repeat itself. Remember the energy sector? Everyone, and I mean everyone, was certain it would boom under Trump's pro-drilling deregulation-heavy first term. Instead, it dropped by 8.4%. But here's the plot twist that makes this story even more compelling. Under Biden's push for renewables and sustainability, that same energy sector surged by 22.9%. This isn't just a historical curiosity. It's a masterclass in why smart money looks deeper than surface-level political promises. The market has a way of defying even the most logical predictions, and that's exactly what makes this upcoming Trump presidency so intriguing for investors who know where to look. But here's what's keeping the brightest minds on Wall Street up at night. We're not just dealing with typical presidential transition patterns this time. We're facing a perfect storm of factors that haven't aligned quite like this before. Trump's return comes at a time when artificial intelligence is reshaping entire industries. Cryptocurrency has matured into a legitimate asset class, and global supply chains are undergoing a fundamental transformation. What does this mean for your portfolio? Well, when you overlay these modern factors with historical sector performance data from Bush through Biden, some fascinating patterns emerge. Sectors that were once considered sure bets during Republican administrations are showing completely different signals this time around. Meanwhile, some overlooked sectors are quietly displaying the same patterns we saw before previous major market moves. But the real story, the one that most retail investors are missing, is how these traditional sector patterns are being completely disrupted by new market forces. And this disruption is creating opportunities that, frankly, I haven't seen in my entire career of market analysis. Now, let me share something that's been keeping me awake at night. A convergence of 4 sectors that are showing signals I haven't seen in over 2 decades of market analysis. While most investors are chasing headlines, the real story is hiding in plain sight. Let's start with energy, because this is where things get truly fascinating. Trump's campaign promise to drill more and dismantle the Inflation Reduction Act seems straightforward enough. More supply, lower gas prices. Simple, right? But here's what most analysts are missing. When you increase supply, you're playing a dangerous game with profit margins. The same policies that might have your local gas station celebrating could send energy stock valuations on a wild ride. It's this delicate balance that explains why energy dropped 8.4% during Trump's first term when everyone expected it to soar. But it's in the technology sector where things get really interesting. Picture this. The Magnificent 7 tech companies are sitting at the peak of their power, dominating the S&P 500 and NASDAQ 100 like never before. Their PE ratios are in what I'd call the nosebleed territory. Now throw Trump's promised massive tariffs into this mix. Those same companies that have been sourcing cheap materials globally are about to face a whole new cost structure. Yet, and this is crucial, Trump's bullish stance on AI could create a counterbalance that most investors aren't seeing. Now let me tell you about what's happening in crypto, because this might be the biggest plot twist of all. When Bitcoin crossed $100,000 last year, many thought they'd missed the boat. But here's what's fascinating. Trump's not just supportive of crypto, he's launched World Liberty Financial to encourage digital coin usage. What's really keeping institutional investors on the sidelines isn't lack of interest, it's regulatory uncertainty. And that's exactly what might change under a Trump presidency. But the real sleeper in this story? The banking sector. While everyone's eyes are glued to tech and crypto, something remarkable is brewing in financial services. Trump's first term gave us a glimpse with eased banking regulations. But what's coming could be even bigger. Think about it. Higher interest rates combined with lighter regulations creates a perfect profit storm for banks. They'll be able to lend out more risk-based capital while maintaining higher margins. Here's where it gets really interesting though. Unlike Trump's first term, we're not starting from zero. The financial landscape has fundamentally changed. Fintech has matured, digital payments are the norm, and traditional banks have evolved. When you layer Trump's deregulation agenda over this new foundation, you're looking at potentially explosive growth opportunities that most investors are completely overlooking. But there's a catch, and this is crucial. But here's the critical part that most retail investors miss entirely. It's not just about picking these sectors. It's about how you position yourself within them. And this is where Warren Buffett's massive cash position starts to make even more sense. Let me share something that might sound counterintuitive at first. While everyone's eyes are glued to the Magnificent Seven's soaring valuations, the smart money is quietly shifting toward value plays. Think about this. Those headline-grabbing tech stocks have pushed the market to historical highs, but beneath the surface, a fascinating rotation is beginning to take shape. This is where ETFs like SCHD and VYM come into play, but not for the reasons you might think. These aren't just dividend plays. They're strategic positioning tools. When I analyze the holdings of these funds, I see something remarkable. They're packed with companies that historically thrive during periods of regulatory upheaval. It's like having a shock absorber built into your portfolio for the volatility that's coming. But here's the brilliant part. And this is something I learned from studying Buffett's moves closely. You don't need to predict exactly which sector will explode first. Instead, you need to position yourself to capture the movement when it happens. Think of it like surfing. You don't need to know exactly where the perfect wave will form, but you need to be in the right position to catch it when it comes. Remember that 5.92% yield Buffett locked in. That's not just about safe returns. It's about having dry powder ready for strategic deployment. The real genius is in the timing. And this brings me to perhaps the most crucial point about market strategy in 2025. And this is where we arrive at the most critical question. When and how do you execute this strategy? The timing here isn't just important, it's everything. Let me share something that most financial advisors won't tell you about positioning yourself for Trump's first 100 days. The key isn't trying to time the perfect entry point. That's a fool's game that even the best Wall Street traders get wrong. Instead, what I'm seeing in the data suggests a much more sophisticated approach. Think about this. While others are waiting for Trump's first executive orders to hit the news, smart money is already positioning themselves through systematic dollar-cost averaging. But here's the twist. They're not doing it evenly across all sectors. Let me break down what I believe is the optimal allocation strategy and why it matters more now than ever. When you look at the historical data from Trump's first term, combined with current market conditions, a clear pattern emerges. The traditional 60-40 portfolio split? That's as outdated as a flip phone in 2025's market. Instead, consider this. The market we're entering demands what I call strategic asymmetry. Here's what I mean. Start with a core position in those value ETFs we discussed, SCHD and VYM. These aren't just defensive plays, they're your foundation for what's coming. But here's the crucial part, and this is where most investors get it wrong. You need to leave dry powder, just like Buffett. Not just for opportunities, but for the specific market dislocations that historically occur during major policy shifts. Remember that incredible statistic about Buffett turning $50 million in yields into $5 billion? That's not just about high interest rates, it's about positioning. And right now, we're seeing similar opportunities forming, but in a way that most retail investors are completely missing. The beauty of this strategy is its flexibility. As Trump's policies unfold, as the Fed makes its moves, as the market reacts, you're not locked into any single position. You're strategically positioned to move with the market, not against it. This isn't just investing. This is strategic capital deployment in a time of historic change. But let me be crystal clear about something. This strategy isn't about getting rich quick. It's about smart positioning for what could be one of the most significant market realignments we've seen in decades. Whether you're working with $1,000 or $1 million, the principles remain the same. It's all about strategic positioning and patient execution. The window of opportunity here isn't infinite. As these market shifts begin to unfold, as Trump's policies take effect, as the Fed adjusts rates, the playing field will change. The time to understand and implement these strategies isn't after these changes happen. It's now, while the smart money is quietly positioning itself for what's coming. Remember, in times of major market shifts, fortune favors the prepared. And right now, you have the blueprint for what could be one of the most significant wealth-building opportunities of the decade. Before I wrap up this analysis, let me share something personal with you. In my years of studying markets, I've seen countless opportunities come and go. But what we're witnessing right now, this perfect convergence of presidential transition, Fed policy shifts, and technological revolution, this is truly unique. This isn't just another market cycle. This is a potential turning point for generational wealth creation. Think about this. Warren Buffett, with all his experience and resources, has positioned himself with $125 billion in strategic reserves. The big institutions are quietly reorganizing their portfolios. The smart money is making calculated moves, while the masses are still focused on yesterday's headlines. You now have what few other investors have: a clear view of where the money is actually flowing, not where the mainstream media says it's going. You understand why Buffett's massive cash position isn't about fear, but about strategic opportunity. You know which sectors are historically proven to thrive during presidential transitions, and more importantly, why 2025's market demands a completely different approach. But knowledge without action is just information, and information alone never built wealth. So here's what I want you to do right now. Take out your phone, open your investment app, and look at your current portfolio. Ask yourself, are you positioned for what's coming, or are you still invested for yesterday's market? The strategies I've shared today, from sector rotation to strategic dollar cost averaging, these aren't just theories. They're battle-tested approaches that the wealthy have used through every major market transition. And now they're yours to implement. Remember, in 6 months from now, the market will be different. The opportunities we've discussed will have evolved. Some will have passed. The time to understand and act on this information isn't tomorrow. It's today. This is your moment. The blueprint is in your hands. The only question is, what are you going to do with it? Until next time, stay smart, stay strategic, and most importantly, stay ahead of the crowd. Listen, if you found value in this market analysis, don't keep it to yourself. Hit that like button right now. It helps more investors discover these crucial insights about Trump's impact on the 2025 markets. And here's what's even more important. Subscribe and hit that notification bell, because I'll be updating you with real-time analysis as these market shifts unfold. The smart money is already moving, and you can't afford to miss what's coming next. Drop a comment below with your thoughts on which sector you think will explode first under Trump's presidency: energy, tech, crypto, or banking. I read every comment, and I'll share my personal take on your predictions in the next video. This content is for educational and informational purposes only. Nothing in this video should be construed as financial, investment, legal, or tax advice. Past performance is not indicative of future results. Always do your own research and consult with qualified financial professionals before making any investment decisions. The opinions expressed in this video are solely mine and not reflective of any other person or entity.